Hey everyone, thank you for joining. Today we are going to be going over the credit builder list. I'm going to show you some amazing places to start building credit. As many of you know, we have to have a lot of established positive credit in order for our credit score to go up. So today I'm just going to be reviewing the credit builder list, some primary trade lines to add to your credit profile that will help you build credit. So if you have not received your credit builder list, you should have gone to the link and it was emailed to you. So make sure you check your spam folder and you will have instant access to the credit builder list. My name is Nicole Scott. I'm the CEO and president of Bay Area WAVE. It stands for Women Against Violence. And I specialize in building credit and coaching people on how to repair their credit, coaching businesses on how to grow, scale their business. I've worked with 2 other startup businesses over the last 20 years, and I've helped them scale into the multi-millions. So I lost my job in 2016 and my credit landed at a 484. So I used 2 different credit repair companies. I just did a Google search and found Lexington Law. And then I found some other ones and I used 3 different credit repair agencies before I finally realized, hey, look, I got to figure this out on my own because they are not giving me the information that I need. I became obsessed with credit and it turned into a business for me. So now I do this full time. I do not have a 9 to 5. This is my job. This is my life. And I enjoy helping people on a daily basis. So a lot of us just aren't educated about credit. Unfortunately, when I was first starting, I was desperate to find someone who could just help educate me, guide and coach me. And I just had a hard time doing it. I was taken advantage of. I got scammed. I bought horrible courses, everything. So all of those experiences and all of those losses that I took, I turned them into lessons. And now I'm able to provide an extreme amount of value to people in the same position, people that are looking to repair their credit and people that are looking to start a credit repair business or any sort of business for that matter, because at the end of the day, the business structure, it's all the same. You have to do all of the same steps. So we're going to go ahead and get started with the credit reports. A lot of people don't even know where to get their credit reports. I work with Smart Credit and they provide a 3 bureau report. The reason why I like them is because it will give you your credit report side by side so you can compare all of the inaccurate data that is being reported from bureau to bureau. And that is a great way to prove to the credit bureaus that the information that they are reporting is wrong. There is only one correct answer. With the 3 bureau report, you can literally just take a screenshot of the information that is reported as inaccurate and send that to the credit bureaus, showing them that the information they are reporting is wrong. So if you just click on the link here, you can access your 3 bureau report. You do want to make sure that you get the 3 bureau report so you can see everything side by side and start disputing. Of course, you always want to start with your personal information first and make sure you only have one name and one address because that shows stability. The first item that we see here, which is a primary trade line, is rent reporters. And if you are interested in signing up for rent reporters, you can just click on this link. It'll take you to their website. But the reason why I like rent reporters so much is because it reports to Equifax and to TransUnion. So it's a trade line that is reported to both of those bureaus. It's a primary trade line. And you can backdate it for 24 months. So say, for example, you've been paying rent and your landlord has agreed to report for you. All that they're looking for is, someone who owns the property to say that you pay your rent on time. It's a yes or a no question. Okay. Now, if you have family or friends, anyone who owns a property that would be willing to say, yes, you pay rent. You can rent a room. It doesn't matter. It doesn't matter how you pay. As what they're looking for is, do you pay your bill on time? That's all that credit is about. It's about trust. So If you've been paying rent, you can add your rent. You can make sure you backdate it. You want to tell them, hey, I've been paying rent since 2018. So you can get credit for all of those months that you've paid rent, because rent does not get reported to your credit report. You will get it reported if you don't pay it, and you maybe go to collections or something, but you would have to sign up for a service like rent reporters to get reported. And be careful with other rent reporting companies, because you want to make sure that they post, I'm sorry, not post, but report to at least two of the three bureaus. A lot of rental companies out there that will report your rent, they'll only report to one bureau. So when we are looking for primary trade lines for ourselves, we want to make sure that they report to at least two of the three bureaus, because there's really no point in getting trade lines if they're not going to report but to one credit bureau, unless you're doing something strategically and you need an additional trade line for that particular credit bureau. So Rent Reporters is awesome. And it is, I believe, $99 to sign up with them, and then to continue to report it to your credit report on a monthly basis is $9.95. If for some reason you do not have anybody that can do this for you, contact me and I will make it happen for you. Okay. Just get with me, get on my calendar, and let's talk about it. If you want to add a rental primary trade line to your credit report. Okay. Secured card. Now, I'm not a huge fan of secured credit cards, but this one is very good because it reports to all three of the bureaus. Okay. And it's only $200 to start. Okay. So you can get approved even if you have bad credit. And a lot of people don't understand the concept of building credit while you're repairing it. There's two sides to credit repair. There's credit building, and then there's credit, challenging, where you're actually sending the dispute letters to the credit bureaus. I do both of those. However, a lot of companies out there completely skip the credit building portion of it. So even if you have challenged credit, you still need to have some credit lines, because when those accounts get resolved or removed from your credit, you want to have positive history, and you want to start building now so you can get some more open, active lines of credit, which are are considered to be your trust factors. These are all trust factors. This is how the banks perceive you. This is your adult GPA. This is your adult report card. So we got to make sure that it's structured properly, so people, when they're looking at us, it doesn't matter, if we're male, female, black, white, Hispanic, doesn't matter. And none of that matters. All that matters is the data that is reported on your credit report. They look at that data, they analyze you as a consumer, and they analyze whether or not they think you're going to pay your bills on time. That's all they care about. Okay. So we have to make sure that we are building a lot of positive credit while we are in the process of repairing our credit and getting those negative data points removed or resolved. The next, this is not a primary trade line, but it's a good resource, the MyFICO app. So once you have repaired your credit and you are looking to get approvals, banks go off of a FICO score. And the MyFICO app is the best way for you to find out what your true FICO scores are. If you're interested in getting your FICO, you would click this link right here, and it will give all of your different FICO variations. Now, Self Lender is a good credit builder. There are different options from $25 all the way up to $150. I like Self Lender. It does report as a primary trade line to your credit. It is considered an installment loan. So you can add this if you don't have established installment loans. Installment loans are student loans, car loans, a loan that you pay the same amount of money for every single month until that account balance is paid in full. I do like Self, but I do not recommend getting their secured card, because you don't get your money back. They keep it, and then when you close the account, if you ever need your money back, they will close your credit account, and that's counterproductive. We don't want to close credit accounts. If you open a credit account, we want to keep it open for as long as possible, because that provides us with history. There is some additional data here. You can go to their website to learn more. Just click on the link here and you can start building with them today. This has been a great tool that I have used personally and that I've also seen a lot of my clients leverage as well. So just make sure that you have it on auto pay and you pay it on time. That's the most important thing that you can do, is pay your bills on time. Here is another credit installment loan. This is a primary trade line. It does report as an installment loan, and it is called Credit Strong. So they have different plans as well, but I put the 2 Magnum plans here because if you want to get a lower plan, go with Self. You can pay as low as $25 a month. But the reason why I like Credit Strong is because they have a plan. This is their Magnum plan, where it is $110 a month. And it is a $10,000 installment loan that is reported to all 3 of your bureaus. Now, Self does report to all 3 as well, and Credit Strong reports to all 3. So if you get Self and Credit Strong, now you have 2 installment loans. And if you get the Magnum 10,000, this is a $10,000 installment loan. You can pay $110 a month for, a few months, and then you can cancel it because there's no cancellation fee. You can cancel at any time without penalty. If you want to keep it for longer, great, because it's kind of like a savings account, but you really don't need to keep it for longer than, 6 or 12 months, because they are charging you interest, and we're just using this so it will report to our credit. And then once you close it, it will show a 0 balance due. So that's going to appear on your credit report as if you took out a $10,000 loan and you paid it back, because there's a 0 balance due. So there is no credit inquiry required for Credit Strong or for Self Lender. So you do not get a hard credit pull. So it is essentially like a free trade line that you can add to your credit that reports to all of the credit bureaus. So you can add multiple accounts with Credit Strong. You can add like the Magnum 10,000, and then after I think 30 or 45 days, you can add another one, and you can continue to make your payments on time until you feel you don't need it anymore or you're getting closer to your goal, because this does show as debt on your profile. So if you're applying for a home, auto loan, or anything, you want to have these zeroed out before you apply, because they're going to take that into consideration. Like, oh, well, this person owes, they already have a $10,000 loan, instead of it saying that you owe a 0 balance. So just be mindful of that. If you have any questions, you can always reach out to me, and I'd be more than happy to help. The next primary trade line here, and this is for your consumer credit profile, not your business profile, is Credit One Bank. And this is a great starter card. They do approve people that have, challenged credit, I would say. You can click here if you'd be interested in pre-qualifying for Credit One. Pre-qualifying means they do a soft credit pull on you, and then when you accept the pre-qualification, then it would be a hard pull from Credit One. So it is a good starter card. They typically give lower limits, but that's okay, because we all have to start somewhere. Now, if you are interested in starting your business, InkFile is my preferred way to start your business. It is super easy, and we will do another video about that later on. Tomo is a fintech company. It's a good option for people. However, the only downside to it is right now they only report to Equifax. So they do not report to Experian, nor do they report to TransUnion. So if you're looking to build up your Equifax profile, this would be great. You can click here to get on the waiting list, and there is no credit required. So they do approve people based on your banking history. They actually connect to your banking using a software called Plaid. And that way they will, just kind of approve you based on, your banking history, and it does not require a credit inquiry. Sky One Federal Credit Union. I do like, credit unions primarily because they have wonderful credit products, and becoming a member with a credit union in establishing that relationship with them is very important, because we want to build relationships with federal credit unions. So that way, when our credit is in a better place and we are able to qualify for things, we already have that relationship established with them. So if we're looking for a car or a home, we can go directly to them and apply for it versus going to the car dealership or somewhere else where we might not get as great of a deal, because it's all about relationships when you are talking about these federal credit unions. Establishing your relationship with them, just opening up a checking and a savings account establishes that a relationship. So you can have a checking and a savings account, open for a couple years, and you don't even necessarily have to really use it. But just having that relationship open, so you have options when you are ready to apply for something. I also have a list of other federal credit unions that I recommend. So if you're interested, just direct message me and I can send you all of those banks that I recommend. They're all federal credit unions. They can all be done online. You do not have to go into a branch. Navy Fed is another credit union that I help people get into. So if you're interested in joining Navy Fed, you can DM me as well. The next option here is banking for children. So this is green light. If you have children and you want to start educating them about financial literacy, this is a great way to do so, because it's a debit card for your kids. There's an app for it. It's just a wonderful starting point to get them familiarized with how credit works and how, our debit cards work and just banking in general. The next option here, this is a primary trade line. This is Discover It. It is a secured card. It is directly with Discover, and Discover does report to all 3 credit bureaus. The reason why I'm a huge fan of Discover It is because it is a secured card. Like I said, I'm not a huge fan of them. However, if you can find a secured card that graduates from secured to unsecured, that is what we are looking for. So, and Discover It does just that. So you can actually get a secured card with them. And then after 7 months, 7 or more months, and they'll look at your profile every month. You want to make sure that you are managing your account properly. You're paying your bills on time. You're keeping your utilization that is reported to the credit bureaus low. You're still using your card, but you're keeping your utilization under 30%. If you can do that for 7 months, use your card, but use it responsibly, then they will graduate you to unsecured, and they will refund your deposit in the form of a check and send it in the mail. And that is super awesome. I had a client who has never had a credit card in his life. He started with Discover. He put a $400 deposit down, and after 7 months, they approved him for an unsecured. And what unsecured and secured means, secured is meaning you have to put a deposit down. Like you are securing your credit loan with your own money, and you want it unsecured because then you get your money back. If it's unsecured, it means that you do not have to put a deposit down. Okay. So with Discover, you have to build that trust factor with them. You have to put your money up front first, and you start building your relationship with them. And then they'll see, okay, well, this consumer is, responsible. We can trust him. So let's go ahead and unsecure the card, and we'll send them their deposit back in the form of a check. Very little companies do this, but Discover is one of them. Navy Fed is one of them. Other secured cards where you have to put a secured deposit down, you generally will not get the option to move it to unsecured. And if you get your deposit back, that means that the account has been closed. And we don't want to do that, because if you close your account, you're going to lose your history. And we don't want that. We want as much history as possible. So if you're interested in applying for Discover It, I know in California, they do pull from Experian. So if your Experian report is good, at least, 40 and above, then that would be a good starting point. I've seen people in the low 600s get approved, and I've also seen people in the high 600s get declined. So there's really no score per se that they're looking for. They're actually looking at your report and the data that is on your credit report. So next is Capital One. You can actually get pre-approved with them. I like Capital One as a starter card because they have a few different cards that they offer people. I know a few of my clients were able to get in with them, and they gave them an unsecured line of $250. And then after they made 6 on-time payments, they increased their credit limits to $600. So Capital One, they do give out lower limits, but it's a good starting point. And I do like their Quick Silver. Any credit card that offers cash rewards or any type of rewards, those are the cards that you want to go for. So they have different ones. The Platinum does not offer any cashback rewards. The only card that I'm aware of that's like a starter card with them that offers cashback is their Quick Silver card. Now, Capital One does have a secured option as well, but if you can get approved for an unsecured, which means you do not have to put a deposit down, that of course would be best. So you can click on the link, see if you're pre-approved. Pre-approvals do not cost an inquiry. Once you fill out the pre-approval application, then they'll let you know if you have been pre-approved. Now, I do know that people who have been pre-approved and then once they actually run their credit, they get declined. That does happen. And unfortunately, Capital One pulls credit from all 3 bureaus. Not many credit card companies pull credit from all 3 credit bureaus because every time they pull credit, they have to pay for it. So that's why with a lot of these other companies like Navy Federal, they only pull from TransUnion because they only want to pay for one credit pull. But Capital One, they're a very big bank. They don't want to take any risks. So they pay extra from each credit bureau so they can understand if they want to, take a chance with your credit profile as it is, appearing from all 3 of those data companies, because at the end of the day, these credit bureaus, they're not bureaus, they're data companies. They report data, and they're not government owned, they're not government operated. They're minimally government mandated in regards to their operations, but that's a whole nother topic. But nonetheless, Capital One's a great starter option for people. And if you can get approved with them, that's just another credit line down that we can have under our belt. Because at the end of the day, our goal is to have at least 10 open active lines of credit. That needs to be our goal. We want to be opening up 3 new bank accounts and 3 new credit accounts every 3 months. Okay. And any inquiry that is not tied to an open active line of credit should be removed from your profile. If you want to learn more about removing inquiries, I have an ebook. It's the 24-hour inquiry ebook, and you can purchase that from me or on my website, and you can get those inquiries removed. Now, this is the secret lenders list. This is some great information in regards to these different vendors, who they pull credit from, what they generally are looking for. So if you know that you're in like the low 600s, some of these places are just not going to approve you. A lot of banks do not require a particular score. They're looking at your profile. They're looking at all of your data points. So if you don't know how to determine your data points, then we need to have a consultation so we can go over those things. But these are some great, some great banks that pull, you can see this one pulls Experian. So Jared, they pull Experian. Generally, they approve people that have at least a 600 or more credit score for $1,500. Now, of course, this is just for informational purposes only. I am not a CPA. I am not a lawyer. I do not give any type of legal advice. This is just for informational purposes based on data that we have gathered. So you can look at all of these different places, but if you want the entire database, all that you need to do is click right here. So you can go to Credit Boards. Credit Boards is a great resource for you to get credit information and to see where banks pull credit from, because it can vary from state to state. So it is a great resource for you. And this is where a lot of people go to put the data so we can learn together and understand how we can optimize our credit score. So if you go down to the bottom, I've just put a couple tips here. The most important thing that you can do is pay your bills on time, put them on auto pay, and make sure that you have 100% on time payments, especially in the last 24 months, because all the way up into the FICO 9 scoring model, they look at the last 24 months. However, FICO 10 is coming out and they'll be looking at the last 48 months. So you want to make sure that you are paying everything as agreed. That's what vendors and banks are looking for, is paying as agreed, no late payments. Okay. Anything that reports to the credit bureaus, that would be TransUnion, Equifax, and Experian. You want to make sure that you pay that on time so you're getting a positive report every single month. Even if you don't use your credit card, so you don't have a payment due, you're still going to get a positive payment because there wasn't any payment due. But we definitely want to make sure that we are using our credit cards at least, a couple times a month, so we can keep the lines open. We would never want to lose our credit account due to inactivity, and that does happen. So if you have credit cards that you haven't used in a while, please use them. Just use them for a tank of gas, $5, $2. It doesn't matter what you put on. Just put something on there where there can be some activity so that credit line stays open. Credit card utilization, you want to keep it under 10%. Okay. I know when you Google it, it says keep it under 30%, but 30% is way too high. The sweet spot is between 2 and 6%. It is okay to leave a balance on your cards. You don't have to pay it to a zero balance, but you want to keep it under 10%. If you go over 10%, your credit score will drop. You will not be able to optimize your credit score if your credit utilization is over 10%. So you want to make sure that if you are applying for any type of auto loan, if you are applying for any type of credit product, that you damn near have everything paid, and it reflects that on your credit report, because any debt that you show on your profile will negatively impact you. Okay. So an example of credit utilization is if you have a credit card and the credit limit is $1,000 from that bank, then 10% of that credit limit is your utilization. Okay. And your utilization at 10% would be $100. So again, the utilization is how much of your credit line of this $1,000 are you utilizing? Are you using your credit usage? Okay. You want to keep that between 2 and 6% to optimize your credit. Okay. Now, history is 15% of your credit score. So on-time payments, that's 35% of your credit score. That's huge. 35% of your credit is from on-time payments. I don't think I said that prior, but let's put that on record. 35% is on-time payments. Credit utilization, that's 30%. So between these two, you're looking at 65% of your credit score. That's half the battle right there. Okay. Paying your bills on time and not using your credit cards. The utilization is only geared towards credit lines. So your utilization does not calculate the loans that you have. Okay, so keep that in mind. Of course, it is looked at on your credit profile, but utilization is looked at of credit lines, the credit limits that you have, and how much of those credit limits you are actually using. Okay. And then we have history, which is 15% of our score. We want to make sure that our average age of history is at least 5 or more years, preferably, 7 or more, but minimum 5. If you need to improve your age because maybe a lot of your credit accounts are new, you want to add authorized user accounts to your profile. If you have family or friends that can add you to their credit profiles, and you can inherit that onto your credit profile. Wonderful. If you do not have any family or friends that would be willing to add you as an authorized user to their credit cards, DM me and I can get you some options, because I have a ton of trade lines that I offer to people based on their needs. We have trade lines that have a high age, and we have trade lines that have high limits, because people have different goals. And depending on what your goal is, we can find trade lines that would help, maximize your credit score. So that is age. And then new credit is 10% of your credit. So we want to make sure that we have less than 6 inquiries per year. So one trick is to get the inquiries removed from your credit profile soon as you apply for something. So as soon as you apply for something, that inquiry comes and pops up, you want to get that inquiry removed. You can use the 24-hour inquiry removal ebook to get that done. But each inquiry is going to cost you anywhere between 3 and 5 points on average. They do remain on your credit profile for 24 to 25 months, but they really only hold value for about 12 months. But again, you want to keep the inquiries to an absolute minimum, because if you have a lot of inquiries, that is kind of a sign that you're desperate for credit and that you might need, money. And banks do not want to give people who look like they need money. They don't want to give it to you because, of course, they think that you're having some financial issues. So just keep that in mind. The next here is your credit mixture. You want to have a nice mixture of accounts. You want to structure your credit report properly. And a lot of people don't even talk about this with their clients. So you want to have 6 or more major credit cards. Major credit cards are Visa, MasterCard, Discover, or American Express. American Express does not report the history, so they are not good cards to be added as an authorized user. As a matter of fact, I do not offer American Express to be added because we don't get the history, and that's what we're needing. But they are a great bank in regards to like rewards and just in general. So if you can get at least 6 major credit cards or more the merrier. I think I have close to 20. And the more accounts that you have, those are more trust lines that you have, trust factors. Each credit account that you have is a trust factor. And if I have 20 open credit cards and I'm rarely using any of them, I can be trusted with money. That's all the banks care about is, can you be trusted? Are you responsible? You can have 2 or more store credit cards. So store credit cards are credit cards that you can only use with that store, like a Macy's card. Sometimes people get Target cards. Those are great cards as well. So you can be added to those cards as authorized users as well, and that will help your history. And then installment, you want 2 or more installment accounts. And installment accounts are Credit Strong, self-lender, those are installment accounts. So I gave you a lot of different options on this sheet alone. Also rent reporters, that's another installment account. So student loans, those are installment accounts, car loans. So we want to have at least 2 installment accounts, and the rest are credit cards. So 8 or more credit cards, 2 or more installment accounts, and we want to have 10 or more total credit accounts on our profile. 10 open active lines of credit that have 100% on-time payment history. And if you want to really maximize your credit score, then you need to have as close to 20 or more credit accounts in order to maximize your credit score. And I know that sounds like a lot, but it's a process. You have to build. You can't just open a bunch of accounts right like at the same time. That's why I say, over the next, generally when you're doing credit repair, it's going to take 6 to 12 months or more. It just depends on where you are at. But typically when you're in the process of building and rebuilding, it takes a little bit longer because you need that history and people need to see what your consumer background and your consumer habits are. Open bank accounts with federal credit unions to build a relationship with financial institutions. You want to get the list from me if you haven't already. Open 3 new accounts every 3 months. And then the secret sauce to credit repair: remove negatives, add positives. I'm going to say that one more time. Remove negatives and add positives. Pay everything that reports to the credit on time. Keep your utilization low, preferably under 5%. and go from there. So if you have any additional questions, feel free to reach me out. As you can clearly hear, my family needs me.